Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, March the 29th, 2013. Sure feels like a Sunday today. I'm recording this video, though, on Saturday, March the 30th, and we're just going to take a quick look at these markets. I wanted to wish everybody, all of our members, all of our extended trading and investing community members, a happy Easter. It's beautiful, 11 degrees out today. Hope you have a chance to spend some good time with your families and enjoy this weather and enjoy, the long weekend and the ability to, spend some time outdoors with your family or indoors with your family. So I hope everybody has a happy Easter. So let's just dive right into these markets. Going to try to be very brief here today. There's not really a heck of a lot to talk about, at least in terms of the stock indices, and we'll get into some of the other markets as well. The market just starting off with the Dow on the daily chart, the market just keeps grinding higher. The technical momentum indicators are slightly divergent here as the price keeps going higher. These are moving lower, but they may resolve themselves just like we did back in this area here, where we were doing the same thing, and then we had a pretty shallow pullback, and then we resumed the uptrend. So this uptrend, the force is strong with this uptrend in the stock indices, and until that changes, there's no reason to really fight it. If I just flip over to my Darvish squeeze methodology here I did notice the Nasdaq. If I just show you quickly, the Nasdaq on the daily chart just fired a Darvish long, which means it broke out of this Darvish box resistance while it was in a squeeze. Hakanashis are blue. Everything looks higher here or about to turn higher, and it fired a long signal with targets a little bit higher. So if I just let me just clear this off. Oops. With targets a little bit higher. So fired a long signal here. Nasdaq might be going higher here. It's not uncommon to fire signal, pull back, and then push higher. So not really quite sure what it's going to do. I just wanted to point out that there was, a potential signal there. So let's jump back to the more traditional charts, and let's take a look at the sister indices. Let's see, the S&P futures. Same situation here. We're actually pushing to new highs in the S&P. That's interesting. The Dow is just below its recent highs. The new highs that it put in, it's below them, and the S&P looks like it's pushing to new highs. So that's interesting. And we covered the Nasdaq, but let's look at it on the more traditional charts. So the Nasdaq, fired a Darvish squeeze, and it's also breaking out of this sort of pattern here. This I guess you could call it a symmetrical triangle. I always call these patterns wedges, no matter what the angle of them are, or the configuration of them. But I guess this is sort of breaking out of this symmetrical triangle. We have a potential, I guess, to retest these highs up and around just 29. Well, let's see where these highs are in the Nasdaq futures. They're right up and around 2868-ish, and we're trading. I think we closed around, I guess that would be 2811 if I'm not mistaken. We have a potential to retest these highs. So, from the Darvish squeeze perspective and from this traditional pattern perspective, breakout, it looks looks decent. I personally think these markets are way overbought, but I keep saying that every week, and they just keep going higher. So until that resolves itself, until we get a decent pullback, or until we get evidence to the contrary, there's no point in fighting the trends. Would I initiate new positions here? No, I'm not really interested in initiating new positions here because I don't like the risk-reward ratios. I don't like the risk-reward scenario. So let's take a look at the transports. So the transports, sort of same situation as the Nasdaq. They're breaking out of this symmetrical triangle with a potential retest of these highs up and around here. So that looks, good for a retest of those highs. Could it push higher? Sure. But this is sort of in the same situation. Things are looking a little divergent here in the momentum indicators as well. But until that scenario changes, You know, an uptrend is an uptrend is an uptrend. So let's take a look at, you know, what I think is really driving these markets, as I've been talking about for, you know, the last several weeks. The dollar index. So the dollar index, you know, broke out to new highs again, intermediate highs, and it pulled back to support. You've got the same sort of pattern sort of happening here, symmetrical triangle, and all we did was push up, break through that, pull back down into the 8-period exponential moving average, and then we're holding the top of the 8-period exponential moving average, and we're holding the top of that pattern. So we're above the you know, the key levels here. We had this one day of volatility, no doubt inspired by the Fed, where we had a quick spike down and it got bought right back up, closed more than 50% off of the lows, and just got bought right back up and into the highs. So to me, it looks like the dollar index is strong. It's holding above 82.35. It's holding above 82.50. So let's take a look at the euro. The euro broke $1.30 pretty decisively here. Although we did, you know, we had the volatility on the same day, going back 3-4 days ago. It was probably one of the Fed announcement days. We had quite a few last week, and it spiked right above the 20-period moving average here, and then it came right back off below $1.30. No doubt it probably grabbed a lot of stops up there for people who were anticipating a short on the euro. And then it came to all the way down almost 250 ticks or 250 pips in the Forex market. We are looking at the futures market here, though, the euro futures. And, you know, it came right down into this support level at $1.2767. So I've had this level on my chart for quite some time. Coincides with some of these levels going back in history. It's interesting that it stopped right around there and it, you know, at least found some intermediate support. So that's definitely a key level. So the question is, you know, as long as we stay below $1.30 on the euro and stay above 82.50 on the dollar index, I think that this, you know, situation is still in play where we've got weak euro, strong US dollar index. And then if we take a look at some of the commodities. Actually, let's take a look first at the 30-year bond. So we were expecting the 30-year bond to push lower, you know, back in some of these areas here, and all we did was really find support. And this is, you know, this is really getting supported, I believe, by the you know, the powers that be. Not quite sure why my trend lines keep moving, but it, you know, the powers that be don't want to see. In my opinion, they don't want to see high interest rates. They want to keep things going. They want to keep inflation going. They want to keep deflation at bay. So, you know, they're keeping interest rates low. And to me, that's what it looks like they're doing. They look at these key levels and they buy into these key levels to push the bonds up and keep interest rates low, because there is an inverse correlation between, you know, the 30-year and interest rates. Interest rates always move, you know, opposite the instrument itself. So, and I hope that makes sense. So, it's really dangerous, in my opinion, at this point in time, to try to get short, you know, the 10-year or the 30-year, for the simple fact that, you know, it's being heavily supported. So, you know, you can almost throw the technicals out the window in terms of, you know, looking for short setups at this point in time. That might change in the future, but you can use the technicals in terms of, you know, determining where support is and where they might want to get involved in supporting this market. So that's the 30-year. Let's take a look at a couple of commodities. Let's look at the gold. So the gold looks like it sort of found a bottom, and it's just, you know, it's really, there's been a lot of weakness in this market in terms of just, not weakness necessarily, but sideways action. As long as we hold these, you know, these lows in and around, 1555, we're trading 1595 right now. Where I'd really be interested, as I mentioned probably in last week's video, is a break above this trend line here. If we break above that trend line, then I'd be looking for a test of some of these significantly higher levels. So it wouldn't be the best entry, but it would be the confirming entry, in my opinion. So I'd be looking at, you know, a test of some of these levels. Those aren't very good straight lines. If we broke, you know, this trend line here, this is sort of what I'd be looking at. Scenario 1 and scenario 2. So not much to, we'll keep an eye on that, but not much really to to report there. Let's take a look at silver. Silver is interesting. Silver is right back down into some of these support levels. So it is effectively building a basing pattern here. And I wouldn't be surprised if we were setting up for a Darvish squeeze in the silver. Let me actually just check. Let's see here. So silver, yep. So silver, we're setting up a Darvish squeeze here on the daily chart. It's actually fired a short because it slightly violated the low of the Darvish box. And the Darvish box would just be denoting that range with a potential target of 2769, 2770. But we haven't really followed through, that level yet. But if we do continue down, there's a potential area where we may find support around 2770. So we'll be keeping an eye on that as well. And then if I just go back to the more traditional charts again, let's take a look at the, let's see, gold, silver. Let's take a look at the crude oil. So crude oil looks like it's building. Crude oil looks like it's building. It held this trend line, and now it's it's broken above this swing point here, and it's established a higher low, a minor higher low off of these levels here. You can see that trend line there. We pulled back, established a minor higher low, pushed above here. So the real challenge point here, crude oil futures look like they're perking up. We've got some, we've got some technical indicators telling us, the MACD crossed over, and now it's testing its zero line. It looks like it wants to cross above there. That looks positive. The stochastics are, short-term overbought. My trending indicator just rolled over to the high side, and this is looking pretty positive. You've got some, some resistance challenge points here. This should probably be red. You've got resistance challenge points overhead at these swing points, and then you've really got this, 100 psychological, 100 to 101. It's both psychological and technical resistance. So that to me, and it's lines up with a 618 retracement of the previous high to low going back, back there. So this is really an area I think that is going to be a challenge point and is going to be intermediate resistance. Anybody that is net short the crude oil probably is going to have stops above here, depending on how much room they're going to give it. So, we could, if we come up and test that level, we could see a spike through it, a stop run. But at this point in time, this is the immediate resistance. Do I think we'll tag it? Probably. I believe Don Villaluz mentioned that the other week that we're entering into a seasonal strength in the oil. So that's something we'll be keeping an eye on. And, from a technical perspective and what I'm looking at here, it's starting to pick up. It's starting to look strong. It's held support, and now it looks like, it's going to, travel up to resistance. So at this point in time, that's sort of what I'm looking at. Let's look at the natural gas. And the natural gas, in last week's video, I believe we were in and around, some of these levels in here. And let me just change the pen to green. We were in and around these levels here. And, I've been talking about for the past several weeks, I was more interested in a break of this swing point for a test of some of these higher levels in here. In last week's video, I think we had pretty much, came up there pretty fast. But we did push a little bit higher this week. Could we push a little higher? Yeah, we could possibly push a little higher. I think the major resistance here at this point in time is going to be, is going to be somewhere in and around, these swing points, 424, let's say 425, somewhere in and around there. So I'll just mark this level on the chart so it's there for next week, and I will save this, because for some reason Windows likes to restart my computer every once in a while. So the natural gas looks more bullish than bearish. The question is, have we made the move, or are we ready to pull back to support either at this breakout point down here, or this dynamic 20-period moving average. So, we could pull back all the way to 374-ish, 385. At this point in time, I think the first test of the 20-period moving average or this breakout point would be a potential buying opportunity. So I would be looking at that. I'd want to see it, hold that level, and then, want to look at, strength going back up for a potential retest of those highs. So at this point in time, that's all I really have for that. And I just wanted to, I think we covered all the major markets. I just want to take a look at, let's see here. I just want to take a look at the Darvas squeeze, a couple of the Darvas squeeze charts here, just to see anything that's setting up here. We have, okay, the dollar index looks like it's setting up a potential long breakout on the daily chart here, a break above this potential Darvas box. Okay, that's interesting. Australian dollar setting up, but it's got a long ways to go. It did fire a Darvas squeeze on the daily chart going back, a number of weeks, but we weren't really watching that. Okay, the Canadian dollar. The Canadian dollar is looking interesting here. I was checking Don and John Vialou's site, so both timingthemarket.ca and equityclock.com. And as you know, we did have Don in here the other Saturday, and he did a very fantastic presentation to our group. It was a great half-day educational seminar, and I was checking his site because I was getting buy signals here on the Canadian dollar versus the US dollar. So I had a Darvas squeeze fire here going back a couple of days ago. Well, it actually fired here off of this Darvas box, and then it just fired again off of this intermediate Darvas box with a breakout above about, let's call it 98 cents versus the US dollar, about 98 cents. So I did get some buy signals here, and when I checked on Don and John's site, it did tell me we're entering into a period of seasonal strength in the Canadian dollar. So that's interesting. I like to use other people's work as confirming indicators for my work. I had no idea before that that this was a period of seasonal strength for the Canadian dollar historically. So this is good information to know, and just thought I would bring it to the members' attention. Those are a couple of good resources, and when you learn other people's methodologies, it doesn't mean you have to throw yours out the window, but maybe you can incorporate them and add to your methodologies, that kind of thing. Take what you can learn and internalize it, make it your own in a way that you can understand it. So this, to me, when I saw this setting up, we put in a lower high here technically, and we put in a what looked like not a complex bottom, but a basing pattern with this Darvas box. And this is what I call a Darvas squeeze reversal, when you break a downtrend line or break the top of a Darvas box after you've been in a downtrend. So we did do that. We set up this Darvas squeeze reversal. We put in a lower high, and it looks like the Canadian dollar is entering into a period of strength. So let's just take a look at a couple of other signals. I haven't really discussed this methodology in a while. The euro, was setting up a Darvas squeeze short off of this box, but it's very sloppy. So I won't even really review that. It's a little bit sloppy. Let's see, the Canadian dollar, US dollar. Let's take a look. So we discussed the Nasdaq fired a Darvas squeeze long. What else do we have here? Potential breakout on the 5-year. Okay, so the 5-year looks like on the weekly chart pretty significant, but it has resistance overhead, at the top of this previous Darvas box. But we should keep an eye on the 5-year. It looks like, on the daily chart and the weekly chart, especially, we could be pushing a little bit higher there. 30-year, the 2-year is in is setting up signals, but it's in the middle of the range. So, that's interesting. What else do we have here? Let's take a look at the grains. We haven't looked at the grains in a while. So the corn is setting up. Okay, that's interesting. The corn is setting up. Looks like we had a limit day on Friday, a limit day down. That's a pretty huge move. Looks like a limit day anyways. You can see we fired a Darvas squeeze on the 60-minute, and we just, blew right through that. We're in the middle of a weekly range here. The daily chart, we're closer to the bottom of that range. But we are setting up squeeze on the weekly chart. So that's interesting. The soybeans, although I don't think there's really much to do there. Usually when you see those limit days, those days can be scary. I don't think those are swing trading markets. Those are crazy volatility. You don't want to get caught on the wrong side of those. Soybeans in the middle of the range on the weekly chart, but it is setting up for a move on the weekly chart there. So it looks like we've been in a consolidation for a while. We're setting up a weekly basing pattern, and whichever way that breaks decisively out of this Darvas box, you're probably going to get a pretty decent move. So let me just mark these levels. It's a pretty wide range. It's quite a wide range, actually. So really nothing to do there but note that is, setting up. Let's see the DBC ETF. The DBC ETF fired along on the daily chart. Same sort of setup as the Canadian dollar in a sense, where you have this, you've got a higher low in place here, and then you broke the top of that box and set up a Darvas squeeze reversal, fired along, potential for for a move a little bit higher into some of these resistance levels up and around here. So on the weekly chart, it looks like we've just found an intermediate bottom, and things are still pretty negative on the weekly chart. In fact, it looks like we're just coming up and testing resistance on the weekly chart. So when I see, a nice daily chart, but I see resistance on a weekly chart, that makes me a little bit cautious. So that's all I have this weekend. I hope it helps, and have a fantastic rest of weekend, and we'll look forward to seeing you at an upcoming meetup, which I think we're going to hold next Sunday at the Market Trading Concepts trading room for an informal meeting, or at an upcoming CSTA meeting. We're just trying to organize that now, the next Oakville chapter meeting. So good trading, good investing, and have a great rest of weekend, and happy Easter. Bye for now.